Arundhati Bhattacharya, chairperson with State Bank of India, joins us with her take on credit policy. Ms. Bhattacharya, good morning. Thank you for joining us. This is your first experience as the policy of the chairperson of SBI. How would you read into the policy fine print? How do you think the yesterday's policy will impact bank deposit, lending rates and borrowing rates going forward?
Actually, it should make a difference because if you see the way the policy has been enunciated this time, there is a movement downward on the MSF side, but there is a movement upward on the repo side. So obviously, you know, there is something over there that we need to take care. If you remember July 15th, and if we take that as the starting point, then there has been 2 repo rate hikes since July 15th. Of course, at that point of time, MSF moved up by 300 basis points, and since then it has moved down a lot. But still, if you consider the July 15th base, there is definitely a hike in the funding costs of the banks. So yes, we have some concerns over there. Having said that, I think the Governor RBI also clearly pointed out to the fact that the savings rate in the country has gone down, and the real interest rates that the people are getting are not always positive in view of the inflation figures. And therefore, you know, the banking community needs to work out ways in which we can bring more savings into the banking system and not allow the depositors to put their savings into real assets. So that is another area that the bankers have to look into, and therefore, yes, I think there would be some changes both in the deposits as well as the borrower rates.
Ms. Bhattacharya, hi, morning. So with this policy, does the governor really signal at last that we are ending the financial repression of savers and we're correcting the imbalance? Or can we hope that the savers get a better rate and that banks will squeeze their net interest margins and pass on the benefit both on the higher interest rates to the depositors and the status quo as well?
A very difficult situation, actually, you know, if you consider, you know, the kind of challenges that the banks face at this point of time with a very stressed economy, and in view of the fact that, you know, the costs are pretty sticky, at least in the public sector environment where you cannot really reduce your staff strength at will, where the wages are fixed to a very large extent, the costs can be very, very sticky. Also in respect of other costs, for instance, rentals, electricity, all of those are on the upswing. So that being the case, you know, compression of margins to a very great extent would be very difficult under the circumstances, because we also need to have enough money to ensure that, you know, we can plow back sufficient amount of profits to ensure capital growth in the banking system itself. Also, we have to take care that we have enough money for any of the stressed assets or NPAs that we might be seeing. So, thinking that, you know, we would be able to increase the rates for the depositors and decrease it for the borrowers, I think that is being a little too optimistic. I don't really think that is a situation that is prevailing at this point of time, and that it could happen is really not something that I can immediately tell you about, but I think it's a little on the optimistic side.
So how long will it be possible for banks, including State Bank of India, to show much faster run-up in the credit growth as long as deposits continue to lag behind, and it is not possible to completely rely on repo window or the MSF window? So when will that gap really get bridged?
But even today, you know, I don't think we are refusing any credit because we don't have deposits. Even today, I believe that we are fulfilling all the needs that our borrowers may be having. In fact, you know, even during the time when the CP window actually closed out because of the high costs, and most of these borrowers came back into the loan book, we were able to take care of all of their requirements. So I don't really think, you know, that any borrower is going back on account of the fact that we don't have money to lend. Rather, I would say that we are not getting sufficiently viable projects for us to lend. And that is one of the reasons why SBI is very liquid. Even today, I have a lot of liquidity on my hands. I would be glad to receive more and more projects and would be glad to lend. So really speaking, at this point of time, I don't think at least State Bank is stressed out on account of the fact that the deposit growth is lagging credit growth. Also, the credit growth that we saw at the end of September was, as I said, a result of the CP market not really being operational. Already, you know, with the CP market having come back, we are seeing a little bit of a fall in our advances levels. Also, of course, it is dependent on the fact that, you know, the oil subsidies, etc., have got paid. So to that extent, the oil loans, etc., have also come down. So we are not really seeing any stress on that front, and we are confident that even in the coming festival season, we will be more than adequately prepared to lend whatever is required by our borrowers.
There's been a sharp run-up as well in the NPAs for all PSU banks, including SBI. Is that because projects were financed earlier were not viable? Because you talk right now of lack of viable projects. Or is it because the PSU banks stepped into the breach after the crisis and continued to lend at a time when maybe it was not prudent to lend?
No, it is not really like that, you know. We have to understand that there were very many nuances in the many projects that we lent, and it is difficult to sort of, you know, paint them with a broad brush. But having said that, I think I'll point out one or two things. One thing, of course, is the fact, you know, that when we did these projects, we did it with an assumption that there'd be a GDP growth of 8.5 and above. Whereas actually speaking, the GDP growth has been 4.4. So there has actually been a lot of demand destruction. Now with that, what happens is that the top line that was being anticipated has not obviously happened. And as a result, what has happened is the bottom line is also impacted, resulting in the stress of assets. The other thing that has happened is that there have been various reasons because of which, you know, the projects have got stalled or have got delayed. These might be on account of the fact that the people who were implementing the projects, it could be 2 or 3 reasons. One could be, of course, that they didn't get the approvals in time. The second also could be, you know, that many of these people were new entrepreneurs who were getting into infrastructure, and therefore their experiences were poor, the management bandwidth was not adequate. So there were very many reasons why they have got into this stress situation. I do not really think, you know, that there was any kind of a instance where a non-viable project has been taken up by the banking system. That was not it at all. At that point of time, it seemed eminently viable. But if you consider the fact, you know, that many stresses have come together, the stress of not getting your approvals on time or not having bandwidth resulting in execution delays, the stress of not having the kind of top line that you had anticipated, the stress of the fact that inflation is growing and therefore the interest rates have been higher, the fact that, you know, the rupee, the foreign currency, number of stress factors have all come together, and therefore, you know, obviously the units are stressed. So I think, you know, this is also a function of the way the economy has progressed and of our environment in general, whether it be local or it be global. So all of these cues have fed into the system and are resulting in stress in the system.
Right, but ma'am, all that intention is fine. At the end of the day, your private sector counterparts have a much lower NPA. Is it because PSU banks rarely carry across on behalf of country? Do you think somewhere SBI ends up paying price for being a PSU bank?
I would tend to agree somewhat with you, though not fully. Because, you know, it is not only a question of bearing the cross, it is also the fact that public sector banks have to follow certain processes and certain guidelines. For instance, if you're talking about resolution of NPAs, we have very clear guidelines and we need to follow those, and most of those guidelines end up in elongating the resolution process. For instance, if you're looking at, you know, resolving or selling off an asset, even under SARFAESI, we have to go through 2 rounds of auction before we can do a bilateral deal. Now, obviously, you know, the private sector, on the other hand, they are not bound by these kinds of processes, as a result of which their resolution time is much, much faster. This is one area, of course. In respect of the other, the one that you said that, you know, very often the public sector gets beaten up for, you know, and it ends up carrying the cross. Well, in some ways, I would say that is correct. in view of the fact that we do carry out a large number of operations for the government. Now, I am not saying that this is not also profitable, it can be, but yes, at times it also can be something that we do which is not really strictly profitable in that sense of the word. So we need to carry out those, but we accept the fact that, you know, being in the private sector, public sector, this is something that we need to do. And therefore, you know, it is part of our DNA. We have always grown up doing it. We don't really object to the fact that we need to do it. We accept that this is the way things are, and probably for nation building it is required. In our country, we cannot have a banking sector that does not look at the requirements, you know, of the people who do not really have banking services. And to that extent, we believe that this ultimately will be a profit-making proposition. It may not be in the beginning, and therefore we need to stick with it and find out ways and means of making this profitable.